There we go. Alright, good afternoon everyone. Today is Wednesday, the 10th day of September 2025. Again, I just wanted to say, if anybody's got any questions about anything, type into the question box. The other people can see what you type in. The other person is me. So, ask any questions you might have, and I'll be happy to answer them. Yeah, this is what I created for you guys to give you an idea of what I wanted to talk about. We talked about options last time, but we're in a unique position this week with the FOMC coming up next week and the FOMC getting ready to make an actual change. So there was a time that this happened a few years ago where there hadn't been any changes for a long time because they couldn't make any changes really with the FOMC, and the period leading up to it was kind of odd. The PPI and the CPI come out before the FOMC most of the time. They come out right before the FOMC because they use that information to determine what they're going to do. And that's no change this time. And you can see the markets reacted to the PPI today. If we look at this, now for those of you guys who don't know, the producer price index is the PPI. Let's look at it on the bigger picture here. The producer price index is the PPI, okay? And the PPI is the producer price index. I said that backwards. Anyway, what it is what it costs producers to manufacture goods. And that being less is a good thing. It should carry forward to the consumers and the prices consumers pay. And that's the one that comes out tomorrow, the CPI, Consumer Price Index. Now, typically you would think that those going down would be good news. And it is good news, but those going down, it means the economy is doing better when those things are going down. Okay. The producer price index and the consumer price index, that's good news for the consumer, for us. But for things like interest rates, it's not necessarily a good thing. So I don't know how all this is going to play out. I know everybody's expecting to have a cut next week, a week from today. When we're in the meeting next week, we'll know, because it's going to have happened before the meeting. The way it played out the last time when we were in a situation just like this, where they were going to make a change, the first change in a long time, is before the meeting, it was all priced in before the meeting, and everyone anticipated it was going to go up. So, like the week before, I started buying calls when I had a dip. So I think I'll get into that in a second. But when I had a dip, I started buying calls the week before. And then, as it was getting to the meeting time, like that day, to the meeting time, when everything was all moved up, all the calls had all moved up, and all the the SPY had moved up. And I'll draw a picture. I'm saying words, but leading up to the meeting, it was going like this, right? Slowly up, kind of like it's doing right now. And then, as we got a little closer to the meeting, it started to be a little more reactive, and the legs started to be a little bit bigger. But when we got right up to the meeting, it was like this, way up at the high. We had all-time highs this morning. It was up here like that, up at the highs. And at that point, it was already all priced in. Okay, it was all priced into it. So at that point, on that day, on that Wednesday, and it was in December. It was the December before Christmas. I don't remember how many years ago it was, but it was in December before Christmas. And the markets were doing the Santa Claus rally thing and all that, so everything was really priced high. And that day, it just tanked. As soon as the news came out, and it's buy the rumor, sell the news, that whole theory. As soon as the news came out, it tanked. And then when, God, I'm not even sure who was the chairman at the time, but when he started talking, I think it was still Powell, but I'm not sure. When he started talking, it kind of recovered. It recovered about 50% of what it lost, but it did lose everything that it had gained in like a half an hour. Everything that it had gained all through that whole week, it had dropped all the way down. So here's what I'm thinking. given what we have going on right now. Now, this is just my theory. No, this is not any advice to buy or sell anything, of course. But this is just what I think is likely to happen, and what's happening right now with price and everything that's happening right now in the markets. I guess I'm trying to get to this thing. Okay, yeah, that. Okay, bring prices back up. What's happened today? If you look at this is the yes, right? Yeah. So what's happened today is, let me crunch this up. When I crunch it up like this, you can get sort of a big picture feel for it. I can talk about some of them, hell. There are a lot of them. When I crunch it up like this, you get sort of a big picture feel for it, right? Because this was the day. Well, this is actually starting yesterday, but this was the day. I think. Let's start here on the 10th, right in here. This was the day. It went up like that, and it came down like this. Now, I was thinking it was going to stop in here and then make another leg up, but if it doesn't stop in there, then it's going to do 100% retracement, which it's almost done. It's going to do 100% retracement. And then tomorrow, when the CPI comes out tomorrow, if we get another move up, if we happen to get another move up, then I think it's going to be pretty close to topping out at that point. I don't know when it's going to pull back, but I'm expecting it to have a decent pullback before the FOMC comes out, so it can run up again before the FOMC. So what I'm suggesting is this: if we get a pullback, now let me throw a tool on here for you. This is a tool that you all have, and I'll just show you a little something. It's inside the sniper, so let's get rid of that and that for right now. Okay, I'm gonna put the sniper on here for you. And inside the sniper, you have this little thing that you may or may not know about. Here. This 777. Did that work? There it is. Okay, make that 777. Okay. Now, this created something here. If you look at, I want to do this on a daily. Let me bump this to a daily. Okay. I know it's not range sharp. I'm trying to make it spread out a little bit so you can see it a little closer. Okay. So if and when the pullback does happen, that I expect is going to happen over the next couple of days, I would expect it to get down here to the 64.70 area, right around here, 64.70, 64.75, right down in this area. Okay. Now, all you guys that are active subscribers, you have access to all this stuff. But this leading line right here, that leading edge right there, is what I expect it's going to get down to. Okay? And if it does get down there, that would be the time to start buying calls. If tomorrow morning, price, I want to say it puts in another new high tomorrow morning, it's going to have a pullback. I don't think it's going to keep going up forever. It's going to have a pullback before we get to the FOMC, I think. And then that would be the time to buy the calls. And then right before the FOMC comes out would be the time to buy the puts. Get rid of the calls and buy the puts. That would be my suggestion. Okay, now I don't know how it's all going to play out, but how I think it's going to play out, and this is on the daily chart, how I think it's going to play out over the next few days is it's going to go, let me use the little one here, use this. From here, at the end of the day, it's going to go down. Probably overnight it's going to go down, and then tomorrow morning it's going to open up and probably not put in another higher high. And then, I don't know where it's going to close, but I think it's going to work its way down here. Down here toward this level right here. when it gets there would be the time to be looking at the calls. All right, when it gets here, it's time to start looking at the calls. And this is going to be down to the 64.74, 64.75 area, I think. And if that happens, that's the time to start looking at the calls. And then when the calls get back up to the, and when the price gets back up to the all-time highs, as we approach the FOMC next week, you want to bail out of those calls, because I know you're going to be wanting to hold and say, okay, well, you know, when it comes out, it's going to be good news, and if they make it a half a point instead of a quarter of a point, then it's going to be great news. It's going to be short-lived news, right? That is what I put in there, Wayne, in that one spot. And I expect it's going to be short-lived reaction, and when it comes out, I expect it might, you know, by that time it'll probably be back up here. You might be at all-time highs again before the news comes out. All right, before the FOMC comes out, be back up here again probably. But I would expect. I get rid of that thing. I think that's a label. Right, let me shut that label off. It's down here. Put labels. Here it is. Labels. Lines, tables, paper. There it is. Okay. The sniper is made for range charts. That's why I was putting that up there. But when it gets back up here, I think it's going to be short-lived, and when the news comes out, it's gonna tank. Initially, anyway, it'll tank, and I expect it's going to do something like it did before. It'll tank 100%, and then do a retracement, a little bit of a retracement. And what I was saying this morning is, at the end of the day next week, I was thinking we're probably going to be back right where we were today when the day started out. Right back in this area, right here, at the end of next week. Okay, I actually drew that on another one, and I said, this is gonna, just put text in here. Return value. Not at the end of next week, but at the end of Wednesday next week. I think price is going to keep going up, because that's what, you know, the markets are designed to do. They're designed to keep going up. And I wanted to just go over this with you guys, because this is, in the past, this is how it usually works when the FOMC comes out. You know, it'll move leading up to what's expected from the FOMC. You know, the PPI and the CPI come out, and then the market reacts, and you have some opportunities in there. But when you're looking at the bigger picture, the whole next week ahead, this is the way it usually reacts. You know, when price will run up before the FOMC, then the number comes out, then it sells off, and then in this case Powell starts talking, and it runs back up. Well, not completely, but it runs back up some. Usually Powell, you know, his talking sort of fixes the reaction, the initial reaction of the sell-off. And I've seen this, you know, hundreds of times. And I expect not tomorrow, but next week will be the same thing. So what can you do? Oops. See, I was looking for, still looking for land. What can you do? Let me just save this. We're going to see next week. And we'll see how it actually works out next week. What can you do about this? Well, that's where the options come in. Okay, that is where the options come in. Now let me minimize this and see if I have any trades here that I'm missing, because I feel like I probably should take some trades too. Some of you guys come here just for the trading aspect, and so let me put this back on the 7 range. And wow, that's a lot of drawings I put in there. Let me get rid of that. I gotta change the sniper. Take off the sniper. Back on TV trades. Let me get rid of this too. I'll get rid of it for now. Put back on TV trades, and we have nothing happening here that we can trade right now on that. We had a trade here a few minutes ago on the NQ we could have made some money on. We didn't have a trade here on the Russell. We almost have a trade here on gold. Alright. Alright. So, with the sniper, that thing that I showed you is only in the sniper, and it's under the snipe filter. Right there. Okay. And the sniper is made for range bars. You're going to have that range. If you try to put it on another type of chart, you're going to have that big thing that pops up that says this is not a range bar chart. This one? No. It's, what was it? Labels, show price value, show this and that. I don't know where it was. But anyway, you're going to have it somewhere in there. Okay. I'm not putting the sniper on right now. Alright. So, now, that's just a big high-level view of what I think is going to happen over the next week. So what can you do about it? More specifically, what can you do about it, right? When you look at something like this, what does it mean? What do all these numbers mean? Right? These are all calls for the SPY. Right? So the SPY is right now priced at 651.59. So the stuff that's got the blue background is in the money because it's less than the call price. It's less than the it's less than the strike price. I'm sorry, it's less than the actual price. The strike price is less than the actual price. This is out of the money because it's greater than the actual price. The strike price is actually greater than the price. And this is more out of the money, and more out of the money, and more out of the money, and more out of the money. And you can see here the cost of these things. If you were just going to buy it, the bid is what you'd be paying, right? I'm sorry, the ask is what you'd be paying. If you're just going to buy it, you'd be paying the ask. Right? So right now, to buy this out of the money, call, you'd be paying $78. This one would be $28. Okay, for one call. And you see how the further out of the money you go, the less it drops. Now that's because it has less of a likelihood of getting there by the expiration date. And this is today's expiration, by the way. Right? I'm pretty sure this is today. Yeah, September 10th. This is today's expiration. So for those of you guys who don't know, there's a time value that's built into this. This one has very little time value left in it. So now you're basically looking at the difference. Basically, the difference between the actual price, which you can see up here is 651.58. So there's 42 cents. The actual price plus a little bit is what you're looking at there for the price of the option. All right. Now there's a chance that the SPY can go up $1 right now, and in that case you'd be in the money. Right? And how much would you be in the money? We'd be about 100% in the money. If you look at this one right here, it's only 50 cents in the money right now. So if you were to get 50 cents in the money, and it happened right now, then you'd be at 151 bucks is what the option would be worth. From 78 and go up to 151, or actually 149 is what the bid is. Do you understand all that? Does everybody understand all that? I just want you to see kind of what you're doing when you're buying options. Now, I don't recommend selling options, but these are calls, and calls are what you're going to buy when you're looking to enter the options market. Okay, now this is just Yahoo Finance, so there's probably a little bit of a delay on all this anyway. Okay, as of 2:51, this is actually this is accurate anyway. So these are calls. That's what it costs to buy calls. Now we'll go down to the put side. All right, you see the white and the blue are on different sides of price right now. See, now the white's all on top, where the blue is on the bottom. That's because 651 in here is out of the money, and 652 is in the money, because 652 is greater Is that right? Is greater than price. Right, we're going up 650. Yeah, 652 is, I'm going to confuse myself. 652 is greater than price. So it's just the opposite of calls. So what you'd be buying it for in here, this one here would be 21 bucks, this would be 11 bucks, this would be 44, this would be 96. That's what you'd be buying it for. Now you can see that right now they're priced so that the algorithm thinks that the markets are going to keep going up, not down. Can you see that in the price right here? Compare this right here. This is one out of the money on the puts is 21 bucks. One out of the money on the puts is 21 bucks. And you go up here, one out of the money in the calls is 78 bucks. That means that the algorithm that creates the prices thinks it's 3 times more likely that it's going to be going up than down. Okay, that's why it's costing you a lot more right now to buy these calls. And that's why I'm always telling you when the price is at the top is when you want to buy the puts. Like right now, they're a third the price of the calls. That's what I'm trying to tell you all these. You know, when I drew this thing in here on the daily, and let's go back to the daily for a second. When I drew this on the daily for you, and I said, when price gets up here, all the calls are going to be really expensive because price is going up and they're expecting it to keep going up, right? They're expecting price to keep going up, so they're gonna price that into the calls, and that's when the puts are going to be dirt cheap. They're a third the price of the calls, right? They're a third the price of the calls. So if you have an edge, and you do, if you have an edge that suggests the price is going to go down, then that's where you take action, right? You buy the puts at a third the price of the calls. You buy the puts because you think price is going to go down, not up. Make sense? Did I just bore everybody to death? I know some of you guys, you don't know a thing about options. And so it's important that you understand the price reflection here based on what the market is anticipating. Because this is a big deal to being able to make money at all with options. Most people don't make money with options because they jump on the wagon right here. They'll jump in right here, think it's going to keep going up, and they'll pay that 78 bucks an option right here. And then tomorrow, when it tanks, you won't even be able to sell it. It'll be worth a penny, and you won't even be able to sell it. And that happens quickly, a lot quicker than you would think. So when you're trading with options, if you got money in it, you got money in it, and you should not lose that money. Right? Make sure you're not going to lose that money. And yeah, I wanted to say all that so you understand. When I say as we build up to here and price retraces back down to that level, this, what did I say, 64.75, the 64.75 level. Price retraces back down to that 64.75 level. Now, the calls are going to be dirt cheap. When it's running down like that, the calls are going to be cheap, and the puts are going to be expensive. Right? These puts right here, they're going to be the ones that are 78 bucks a piece, or even more. 100 bucks, 200 bucks a piece. But the calls are going to be the ones that are 20 cents or 10 cents, or not cents actually, but 10 bucks or 20 bucks a piece. Because price is going down, the market's anticipating the price is going to keep moving down, and they're going to make you pay for it. They're going to make you pay for that volatility. They're going to make you pay for the time. And the time is another issue. This is all based on stuff that expires today. Now look at these prices right here. Right? These are the puts and calls. Well, these are the puts right here. We'll just come right back to them. Well, let's do the calls because it's closer to the top. But these are the calls right here, right? These are the prices of calls at current price. 149 by 151 in the money. 77 by 78 out of the money. Now, we'll go here and we'll add one more day. This is the time that you're paying for right now. Okay, so we just added one more day. Same call. Look at the difference in price. You see that? It's 2.5 times as much. So when I'm saying to buy, what I mean, Hal, is you would actually just click on this thing right here, right? And then if this were a brokerage account and I clicked on that, it would give me the option to buy to open. Buy to open. Alright, when you do that, you click on that, you say buy to open, and then and then you have the option to do a limit order or a market order. And if you do a limit order, usually if you split the bid and ask with a limit order, you can't really do it here because there's no difference in between the two. But if if there's a spread in between the limit and between the bid and the ask, if this was like 178 and this was 174, you could try to buy 175 or try to buy 176. And split that. So it wouldn't be at the market, and it would be a limit order. You could also put a limit order right at the bid, so you get the bid anyway. Okay, or you can do a market order, and with options, the timing is possible. You could have the timing just perfectly wrong, putting in a market order and somebody else is doing something, and it could screw you up pretty bad. But usually it's going to be within a cent or two. Last week, when I said all this stuff last week, and and I put in my order last week, when I was buying calls, when it was dropping and dropping and dropping, and I was buying calls at that time, and I put in my order to buy calls, when I put it in, I actually got 3 cents positive slippage on my entry. Because remember, you're buying when everybody else is expecting it's going to keep going down with the options, right? And they're selling their calls. They're getting out of their calls, and they're trying to bail on their calls, and they'll take almost anything that you'll give them for them, because if they run out of liquidity, then they're just stuck. They end up with nothing when it expires. And so if you're creating liquidity by being willing to buy that call that everybody's trying to get out of, then you can get really positive slippage on it, because the timing of it is everything. And that is my lesson. Okay. Alright, so we might have a trade here on the NQ. Let me slide this up. Now, there are a bunch of different ways, there are a bunch of different strategies that you can have. I thought I created something in here. Here it is. This. There's a bunch of different strategies that you can do. Here's a list of them from my broker. You can do all these different kinds of strategies. I'm not going to go into any of those. Buy calls, buy puts. I'm keeping it as simple as that, because you can go into a whole bunch of things here that you can do. We have unlimited risk in some cases, no risk in other cases, and with the swing trade, you notice that if you had traded in the direction of the gray arrow when the next bar opens, you would have won. Have you found this to be true? In the direction of the gray arrow. I think so. Hang on, let me just create your scenario. Okay, we're looking for a down close here on the NQ, by the way. It's got a high here of 67.75. It's be selling 62.75. 62.75. Just about right there, actually. What the heck? Why does this look like it's delayed? No, it's not 62.75. 68.75. What am I thinking? It's 5 points, right? Yeah, so 68 down to 63.75. That's what it is. Duh. No. Why is it not? Why am I not thinking this right? It's on a 50 range. That's why it's on a 50 range. I was thinking it was on a 19 range. I was saying, what the heck, man? Okay, there's no trade there. I guess I thought it was. Thank you. Thank you, James. I did not realize I was on a 50 range there. I was like, what the heck? That's not 5 points. That's not 5 points. Alright, well, the 50 range is looking like it's going to sell. Now you see this thing right here doesn't have any red in it, so it never made it into the overbought, so there's no trade here on the gold. Now, with the swing trader TMJO group, let me go back to your question. And let's do this on a bigger time frame. Okay, and we'll put that guy on there. And so what you're asking is if you took the trade on the gray arrow instead of the black arrow. There is definitely something to that. I actually created another thing that I haven't distributed that will pick out the gray arrows that are most likely to be the ones that are going to work out. But you know, sometimes you get like 5 gray arrows in a row, like this. Right here. You know, the gray arrows always close opposite of the direction that you're going in. So the question, so you guys, with the swing trader, I have noticed that I have traded, that if I had traded in the direction of the gray arrow, when the next bar opens, you would have won. Okay. Now, that is the case. A lot of the time, that is the case. But the gray arrow happens on an up close. When you're looking to short, the gray arrow happens on an up close, not a down close. So, you know, the gray arrow, it lets you know that the next bar is likely to be the signal. And I did create something. I'm not waiting for the black arrow, I know. And I did create something that would let you know which gray arrow is more likely to do that. I haven't released it yet, and then I got sidetracked into something else. It's actually pretty incredible. But it's even more incredible. Let me see if I can show you. Trying to open something in here. Open script. Open script. Sort by newest first. I think I'll do this one. Add to chart. Let's see what this comes up with. Okay. There's a lot of things I have to turn off, but there's a whole bunch of things I created in here. Get rid of that. Actually, turn off everything else. Leave that on. Shut that off. That off. Go in here, put in the password. How many X's did I put in there? Oops. Try it again. Okay. And come back in here and turn that one on, I think. No. This is the one. Make it black. Make it a line. Okay, let me see if I can find instances of it here. I'm not sure I got it put together exactly right. It's not put together exactly right. I got to change some settings in there. But it's basically something like this, where they come out of the oversold together, and this one does not go past that blue line right there. You sell the open to the next bar. And it works the opposite way too. But when they come out together, like this right here, you sell the open to the next bar. And going in the opposite direction, when they come out together like this right here, you would buy the open of the next bar. Buy the open of that bar. This is 100 range. And it works so well. But I'm still working on it. It's a work in progress. But the other thing that you were talking about, TMJO group, about picking out this one, which one of these are the most likely to give you what you want. I am working on that. I do have something that was really good with that. It did another line behind it that was brown, so you'd have like an extension to it. You'd have this brown extension on it. I'm trying to remember if I have that inside here. I probably have that inside here. No, not inside this version. There's another version that I have it inside. got like 6 other things up here that I created. But but I am working on things. I'm always working on things to make trading better and easier for all of us. You know, I make a living trading, and so until I can get it so it's perfect, I'm gonna keep trying. And and every time I make an advance, it's an advance. You know, I don't know what I don't know, so I'm gonna keep trying. And so we still don't have any trades here. Still don't have any trades. Alright. So I spent 37 minutes going over the option stuff. Did you guys get a kind of a halfway good understanding of how that all works out? How you can take advantage of that? Okay. Now, there's a bunch of different ways you can trade options, as I showed you with, I believe it was this picture. There are a bunch of different ways. You gotta have, you know, you gotta have a certain type of account to be able to do most of this stuff. You know, be able to write anything. To be able to write calls and puts, to sell calls and puts, to open. You gotta have some proficiency with options before they let you do that. Alright, so I got all this red stuff all over the place here. I'm gonna remove that. Okay. I got the Telegram alerts. Okay. Hal wants me to help with the Telegram alerts. Let's get into those a little bit. Okay. So, here's the Telegram swing trade channel. Which one did you want? Which one did you want help with? See, here's some alerts that just popped up right here, Hal. On the NQ and the MNQ. Now, these, they both popped up in the swing trade channel. So they're down here at the bottom. These two right here. Now it has an asterisk on it right here. That means, what this means right here, this means you got the gray arrow. That's what this means. On the chart, you got the gray arrow. Alright? Saying on the NQ, on the 200 range NQ, if the next bar closes up, you're going to get a black arrow. Now, Tam Joe Group, if we go to the 200 range NQ, there's the gray arrow right there. That's what just came up. That's what caused that. I guess you can see that we had 3 of them in a row now. What you were just suggesting is, when you get that gray arrow, just buy. You know, instead of waiting for the black arrow to buy, just buy on the gray arrow. Think about this. Okay. The black arrow is not going to happen until you have an up close. If this is the way this arrow is pointing, the black arrow is not going to happen until you have an up close. Alright. What usually happens when you get a move is you get a 50% retracement of that move. That's what this midpoint thing is all about. But in this case, your move is from here to here. Alright? So this is just something you can consider when you get one of those gray arrows. From there to there. Okay. If you go and look at any one of these, it's going to approach that midpoint. Like these that don't change right on the gray arrow, it approaches the midpoint. Oops, let me do that. It approaches the midpoint of the one that did have the gray arrow. You see that? Almost there. And the next one down. Almost there. And this one down. Almost there. They usually do that. Almost every one of those does that. You don't usually see a gray arrow followed by a bar that just completely goes in the opposite direction. You don't usually see that. They usually go a little bit in the right direction. And eventually you're going to get the black arrow, or eventually you're not. Right? This is one right here that didn't go in the direction at all. So you would have completely stopped out on this. So what I'm suggesting is, if you want to create a strategy for that, Craig, I use Schwab is who I use. Used to be TD Ameritrade, but they changed it into Schwab. That's who I use for options trading. But if you want to create a strategy for this, sorry, I'm like a squirrel. I would suggest, risking probably half a bar length to get half a bar length. If you're going to do something like this, using that information. Damn Joe Group. They left. Okay, well, they'll be able to watch it later. That's what I would suggest if you're going to create that strategy. Okay, so I'll stop replying to them since they just left, and I think I finished my explanation anyway. And I'll take these off, and now I'll answer Hal's question in more detail. Okay, I'm going to put this back here. And so right now, from this, you would expect to get up to about right here. Okay, with a stop right about here. That's what I would do. And if it gives you an up close, you're going to have a black arrow. If it doesn't give you an up close, well, you're going to have another gray arrow, probably. Alright, let's put this back on the 19 range and see if I got anything going on there. No trades anywhere. Alright, so, Hal. No, use the Schwab platform. I don't even think they have a TOS platform anymore. I don't know, Greg, but I use the Schwab one. It's pretty intuitive. Okay, and I'm sure there are cheaper places out there to trade options, but I don't do it all that often. If it was something I did every single day, then I'd find a cheaper way to do it. Do you still have the Thinkorswim platform? I don't know if they had that for options though. Craig, they're all available. They are the previous ones. If you go here to targetviewtrades.com, click on upcoming and past webinars. They're all in here. This one is going to be right here. In a few hours, this one will be right here, and this was last week's. Last week's will move down here, and all the weeks before that are right here. Okay, they're all available there. They're also out on YouTube, but you can find them a little quicker right here. These are all the Wednesday meetings right here. Okay. No, TV Trades doesn't have all that stuff. It's not. TV Trades is just kind of like a show thing, and I haven't updated that in the longest time. I gotta get on that. I'm doing a bunch of things. This whole house thing, and the land and house and all that really sucked up a lot of time in the last week. And it looks like we're not gonna get the land we want anyway. So, alright. So I just go back to relaxing on my boat. No, I did not get the land that I wanted. We were about to put a deposit on it and it went under contract. Alright, a down close here on the NQ would be a short. Okay, and that didn't happen. How'd the 50 workout that we're looking at earlier? It was this one right here on the 50 range. That worked out really well. Alright, gotta put that on. This is not a valid trade here on the NQ. This one right here, it's not flat. Right there. The bar before has to be flat. So right now it's got to go down, get into the oversold, then come back up into the overbought, then get out of the overbought again. The ES is the closest thing to a trade right now. The ES and then the Russell, as far as trades go. Yeah, we were kind of bummed about it too. We were excited. It was exactly what we wanted, that land was. And we were willing to pay the price. We were paying twice what we wanted to pay. But somebody else was too. They were just a little faster than us. It was only on the market for 5 days. They could have probably gotten a lot more for it. I'd have paid more. But anyway, I digress. what was I going to show you? Oh, we're looking at the Hal. I keep getting sidetracked on you. Okay, so I started talking about these, right? The 200 range. When you get this, it says it's likely going to be on the up close. Swing trade buy likely on up close. This means you got a gray arrow, right? That's what that means. You got a gray arrow, and you got a gray arrow on a 200 range, and it's suggesting that on the up close of the next bar, you're going to have a trade. You're going to get a black arrow. That's what that means. Okay, and it does it. They don't always come out together. The MNQ and the NQ don't always come out together, but most of the time they do. So you'll see them trigger whenever they trigger. Right? This is actually a trade over here on the NQ. Crap, and I missed it. Cancel. I missed it. It was right there. That was a perfect opportunity. Well, we get the next one. As we get closer to 4 o'clock, there should be plenty of opportunity. So I'm not killing myself to take all the trades right now. As we get closer to the end of the session, there'll be plenty of opportunity, I think. Alright, so in here, Hal, you see that there are different, the suggestion, the ones that have the star, a down close on this is going to be a trade. You see how you still have red right there? That means that did not cross down. Okay, now you're not going to have a trade. It's too high. Okay, cancel. You see how this one right here has an asterisk before it? That means that was created by the swing trade tool. Alright, that's what that alert was created from. It's created from the swing trade tool. So you can go to 200 range with the swing trade tool on it and see the gray arrow right here, which is what I did a few minutes ago. Okay. The ones like this one right here, the app, this is actually a stock, the APP time frame, it's a 500 range, equity is a $5 per bar chart. The 500 range is a $5 per bar chart, and the current price at the time was 567.28. It had a target and it had a stop. The way the stop is created is based upon the bar size, the trigger bar. It's based upon the low of that trigger bar. The target is created from the previous swing high or a low. That's how those are created. Alright, and this is a stock, so it's the APP. Let's see. I'll do it over here on gold, because gold doesn't have anything going on right now. APP. This is it. And this is on a 500 range. So let's go to a 500 range. 500 range. And this was you could have the TV trades on with, this is what it comes from. If it doesn't have the asterisk, this is what it's coming from. Alright, these arrows. And so that should have an arrow on it there somewhere. It's either coming from those arrows or I created something else, some other kind of trigger for it. Look, we almost had a trade there on the NQ. It just flipped back and forth, the background color. What was the actual trigger on that? It was at 1319 today, 567.28. And it had a target up here of 573.9, so it hit the target. And it was here at 1328. 1319. It was right here. It said to buy right in here. Okay? And it gave a target of right about here with a stop right about here. The stop was 567.28, so it was, well, it's actually, it might have been not that bar, it might have been over here. I think the stop 567.28. But anyway, the stop was down here and the target was like right here on that. And so it gave the signal and it hit it. But that is, that's part of what I kind of went over at the end of the last meeting. Let me bring this up. If you get one of these at the end of the day, like this was 1407 yesterday, if you get one of these at the end of the day, that's what I talked about options. You can buy some call options if you get one of those at the end of the day for the next morning. You know, because usually when the price opens up the next morning, it's going to be worth a lot more money. And that's exactly what I was talking about. That kind of situation right there. Get one of those toward the end of the day. You want to buy call options, because usually by the next morning at the open, there's a reason. Alright? And that right there would have been hundreds of percent right there. And the same thing with the puts. If you get one of these at the end of the day, and this was not at the end of the day, this was at the beginning of the day, so it's not necessarily, it still works, but the end of the day ones are the ones that I like the most. If you get one at the end of the day, usually by the open of the next morning, price is going to be significantly higher. Okay, and that is in the same TV trade swing trade channel. Alright, the difference is that it comes from those arrows. These come from those blue and red arrows, whereas the ones that have the asterisk on it come from the swing trade tool. I'm not sure, but I don't think, let me go and look. Just put this over like this, go to alerts. Yeah, I didn't make any using the swing trade tool. You see all the ones that have the asterisk right here? This is one that I made last week. Now, I don't think I made that with the swing trade tool. I might have. But, and we just about have a trade here on the NQ. We need an up close followed by a down close on the NQ. And the gold, I think, is too low right now. Gold could trigger. But the NQ is not going to be a trade. It's not flat. It's not going to turn into a trade. But I don't have any equities or ETFs for that matter, I don't think. Did I do any ETFs with that? It doesn't look like I did any ETFs with that. Q, MES, RTY, MYM, GGAL. That looks like one I might have done. GGAL and APL. Huh. Let's put that on, because that would make more sense to me. The swing trade thing on this, on the APO. This is it right here. So the APO did trigger off of this. This is what the APO one triggered off of. Alright. It's right here. When I first put those out using the new tool, I didn't put the asterisk on. So I have a couple out there that I did for stocks. Like this one here, probably. It didn't have the asterisk on. This one doesn't have anything to put it into the Telegram channel either, though. Yes, it's got nothing going into the Telegram channel. Oh, I guess it does. Sorry. That's actually putting some State Street stuff in the Telegram channel I haven't even looked at. Alright, so we were looking for an up close over here, but it's not going to work out because it's too far away. I'm sorry, that's EPP anyway. I put a trade on gold based on that to shut that off. Alright, so back here, I don't know what's happening with this. It didn't paint the midpoint. It didn't paint a couple things here. Let me just do something really quick here on the ES. There it is. Okay, so the ES on the down close would be a short right here. Alright, it's got a high right now of 26.75. You'd be able to sell 24.75 on that. We have nothing here on the NQ yet, and that's it. So your TV Trade Future Signals. How do you join the TV Trade Swing Trade channel? Also connected to the TV Trades, which was... Okay. Craig, if any of you guys... Was it Apple 500 range, James? Was it APP or was it APPL? I don't know. My mind is scattered enough right now. Oh yeah, not gold. Okay, I see what you mean. Yes, it was not gold. It was not an actual trade over there. Alright, the NQ is about to have a trade here, so get ready for it. Okay, we need the up close. There it is. The up close on the NQ. Here's our first trade of the session. The ES is also going to trade here. They're going in opposite directions, but this needs to go 10 ticks in a profit, which I believe it just did. Stop to break even on this one, and see where it goes. Break even. Okay, so one break even on the NQ. That was right there. Break even. And the ES is starting to work. I'm not sure if that should go to break even yet. It's headed to the low of the day right here. The ES, you can see it right there. But we'll see where it goes from here. I know when we get to the end of the day today, there's going to be a lot of activity. And when the European markets open up, there's going to be there should be, I would think, a lot of activity tonight. And who hasn't had a chance to trade in this stuff since the PPI come out? The Asian markets. Australian markets. Alright. So more questions. Yes, it's not gold, you're connected to that. Craig, I'll send you an email. The welcome email that I send out to people when they join, when they take the trial or anything like that. It's got links to all of the stuff in it. Okay. Speaking of that, I can send a couple of those out. But I'll send one to you, Craig. Alright. And then you'll get access to all. There's 4 channels that we have that you can get into. And they give a lot of information, a lot of trades. Between the 4 of them, there's a lot of trades every day. Right? I don't monitor what they put out because I'm trading on my charts all day. But I know that it's coming from the charts directly there. Should I have gone to break even? I should have gone to break even. It did hit 23.75. Did it? Below? Yeah, it did. I should have gone to break even. Darn it. Okay. Well, hopefully I'll get another chance here. But this window always on top. Okay. We don't have anything over here on Apple. I'm going to put this back to gold. GC. I'm going to throw this at break even right now because I should have had it at break even. And no, I'm not at break even. I should have had it at break even a few minutes ago. I'm going to put this back on gold. Since I'm the GC one, that'll work. Right. So this one here with a double AAT TV at Walmart. These are all buys that are triggering in right now. So that suggests that all these big ones are giving buys. So it suggests that the price is going to be moving up here over the next half hour and into the probably tomorrow morning. But remember, the CPI is coming out tomorrow morning. And if we get a dip into that 64.75 area, that'll definitely be a time to start looking at buying some calls. It will be for me anyway. And even if it doesn't happen tomorrow, if it happens anytime it happens, if it happens Friday, or if it happens Sunday night. Okay, Craig. Okay, it's a lot cheaper, You've been on the weekly for a year. You'd be surprised how many people are doing the annual compared to the weekly. It's all good with me. Yeah, thanks for trying to assist me in my land stuff. It's funny, because we had some people that live around me here now who who have become partners, who have joined and become subscribers. And one of them, Jessica, she's in a loop with the land and all that stuff, builders and contractors, and Jada is too, but she was in the loop, for 25 years until her dad retired about 15 years ago. But Jessica's right in the middle of it all. And so she's, in all the communities that I go to, they're all gated communities. And she's able to get me the codes for the gates so I can go and check out all these land, all these properties and stuff. See these right here now? Swing trades. They don't have asterisks on them. So what that means is, if you're looking at the 200 range, the regular swing trade tool gave the notification before this one did. Okay? So if we bring that back up, this one right here was regular swing trade tool. This is the swing trade tool that you guys all know of, and this is the TV trades, the arrows from TV trades. Actually, no, these have asterisks on them too. I thought those down there didn't have asterisks on them. Am I looking at the right thing? Yeah, click on that for a second. Come back here. The ones that just came up didn't have asterisks on them. I didn't think. Anyway. If they have asterisks, then they're using the tool. If they don't have asterisks, then they're not. I don't know what's going on with this. Not refreshing all the color like that. That drives me nuts. So I'm waiting for trades here. We don't have any more. So far we've had the one break-even trade, right? It was on the ES. Right? Read that down. We haven't made any money yet. Did we have a break-even on the NQ too? We did. We had a break-even on the NQ too. Did we make money on the NQ? I have a green arrow on that. I think it was a break-even, but I'm not sure. I'll go see. On the NQ, it is a break-even. So we have two trades, and both of them are break-even. Alright. More information. Yeah, that other thing that I created. Now, I originally created it for the ES7 range. But it works on everything. And I'll give you a sneak peek. I have it running on this. I think this is what I was trying to show you. This is the MNQ 100 range, but every time this pops up, it comes out of the oversold at the same time, pops up and doesn't exceed that line. You sell the open of the next bar. I'm going to change it so the midpoint's right there, but you could sell the open of the next bar there. Right here, you buy the open of the next bar. 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 Sell the open of the next bar. Sell the open of the next bar. Buy the open of the next bar on this one. Buy the open of the next bar. Sell the open of the next bar. Buy the open of the next bar. You see how simple that is? You're just looking at this down here. When they come out of the overbought or the oversold together and they don't exceed the point that I'm going to actually create at some point. I'm going to finalize this, but just like this, you buy the open of the next bar. You buy the open of the next bar. You buy the open of the next bar. Every one of those worked. Every single one of those. And this is 100 range. Sell the open of the next bar. Every one that I've shown you right now, last 20 of them in a row have all worked. Buy the open of the next bar. This one didn't work. Actually, you'd buy the open of the next bar, but it gapped all the way down here. Sell the open of the next bar. Every one of these has worked. Buy the open of the next bar. Buy the open of the next bar. And this works on everything. This is an MNQ, but I could change it to... This is an MNQ 100 range. We'll change it to an ES7 range without changing anything else. Hopefully it's all going to work. Getting everything to show up when I change symbols like that was the complicated part. Okay, so right here, sell the open of the next bar. You don't get as many with this, but sell the open of the next bar. Buy the open of the next bar. Buy the open of the next bar. That was not, it didn't go far enough. It would have worked, but it didn't go far enough. Sell the open of the next bar. Sell the open of the next bar. This one really didn't go far enough. I'm still establishing the ranges of those things. This would have worked too, but it's not exactly the right signal. This one, buy the open of the next bar. Buy the open of the next bar. Sell the open of the next bar. Buy the open of the next bar. Buy the open of the next bar. That's not one. You see where I'm going with this, right? Yeah, it's only when they come out of the overbought or oversold together and the black one doesn't go too far. It's got to go into a range, like this range right here. Hell, it's got to come out of the overbought or oversold together. They got to come out of there together, and it can only go so far. The red one has to go all the way. The red one's got to go all the way, and the black one can only go so far. If the red one doesn't go all the way, no trade. And if the black one goes too far or not far enough, no trade. I've been working on this for a while. I put a lot of hours into this, but every single I've shown you has worked. Future stuff. Join now. Join now before I don't let anybody else join. Now the beauty of this thing that I just showed you is you can change it to whatever time frame not whatever time frame, but whatever range bar you want. Okay. So if you're worried about everybody executing the same thing at the same time, go to a different range bar. Go to either a higher range bar or a lower range bar. I don't know, John. I'm still working on it. I mean, I've tested it out some, but I did look at it with stocks as well, Craig. But you gotta look at much larger time frames, and it does work. It's not the same as futures because it'll take like maybe one trade every other day or something like that. Alright, we might get something here on the NQ right now. We need a down close. 28.50. We're now getting into the time where we should start seeing some trades triggering here pretty regularly. Okay, we just flipped the YBR. I mean, we just changed the color on that, so we're going to be looking for longs. The ES hasn't changed the color yet. It's still red on this one, so the ES could give us a trade on a down close. The Russell is still red, the gold, and this one is still blue. So we'll look for a down close here on the ES. Oops, I put it in the wrong place. Cancel. There. Yes, we're looking for a down close here on the the NQ. See all these gray ones? It's obviously getting ready to push back down to the midpoint here. And there's your swing trigger that should push us down to the midpoint, and we could get a bounce off of that. We're in the overbought here. You can tell with the yellow arrow, so we need to hit the midpoint and get a down close on this bar right now on the Russell. Over here on the ES, we have a high of 28.5. CB selling 26.5. Yes, you're welcome, Angela. Alright, so we're still looking for a down close here on the ES. Even now we're looking for a down close. If this bar closes up, we won't be. Alright, now on the Russell, we're also looking for a down close. The ES is not a trade, it just flipped color, so we'll cancel that order. And the Russell's probably going to do the same thing. The Russell could still give us a short trade even though all the other indices are going up. It'd be 72.4 is what you'd be selling on that thing. Another alert just popped up with the asterisk on it this time. It's right here. This one. YM50 range. Okay, there's no trade on the Russell either. Cancel. So everything's starting to run right here. Now, I don't know where we stand on the day. Let's go out one more and see where we stand on the day. Oh, this is the SPY. Let's change this to the ES really quick. Okay, so we're right at the open right now on the day. If we close up above here, it'd be a new high close, meaning the highest close we've ever had. A new all-time high close is what it is. Well, we need something to get down here toward. There's another 100 range. I don't know what it says. Actually, it's given a sell. And that's okay, because we're expecting it to go down a little bit right now anyway. Not a trade here. We got all the way into the oversold with no trade. Okay. We have 15 minutes left, so I'm hoping we're going to get something other than break-evens, because that's all we got so far, a couple of break-evens on our trades. But I did spend a lot of time in the, I suppose, in the lesson part of this one. You guys feel you gained anything out of all the option stuff that I said? Or was it just me rambling? I think we'll see what price does over the next day or two. But I would definitely be buying if it pulls back to that. I mean, it's not a huge pullback. I'm talking about right down here. Could do that tomorrow. Let's just take a better look at that. I guess that is a trade there on the NQ. I was worried it wasn't because it was too low, but it's actually a trade right here. This up close is a trade on the NQ. Okay, so I just jumped on it here. And we need 10 ticks in profit, and we'll bump that stop to break even. Get ready. It's gotta get up to 57. It's gonna go. There it is. Stop to break even. Unlock something in here so I have something to show for today. Oops. I didn't mean to do that. Crap. I pushed it too far. I didn't mean to get that much. Oh well. Not even sure what I did get. Okay, that's $500. And that was right there. Okay. Got all those gray arrows. Now, almost every one of them went into the other bar after it. Almost everyone. That one didn't. And then finally hit your black arrow. That was a decent push down. The alerts that said to go short when this was up here, they were correct. Hal, did I answer your question about the Telegram channels? And Craig, let me just copy this and I'll send you an email right now, I think, with all the information you need. Okay, it's just going to be the welcome email, Hal. But it'll have all the information that you're looking for. I hope I can get to it. There it is. I mean, sorry, Craig. It's just going to be the welcome email. Right. It's got all the Telegram channels in it. Wow. Too bad we didn't have a trade for that. Get rid of the NQ is really thinning out right here. If we get a down close, nope, nothing. Charlie Kirk was shot on a college campus in Utah. Huh. I like that guy. That just came in the news. Alright, look for the up close on the NQ. Still look for the up close on the NQ. No, you can't. No, it's not going to be a trade. Alright, we might get something here on the Russell. A down close followed by an up close could give us something here on the NQ. It is 351. 351. And so far we got 10 ticks on the NQ. That last trade we could have gotten all 45 on. I moved it too fast accidentally. Okay, so right here on the NQ on an up close, be a trade. Get ready for it. now it's not going to be a trade. It's too low. The ES is not going to give me anything. The Russell is the only thing that's close right now. But the NQ could change really quick. An up close followed by a couple down closes followed by an up close. Didn't make it into the overbought. It needs to close up, but get into the overbought. The ES needs the same thing. The Russell didn't get into the oversold. So right now everything's kind of hanging up here at the end. We need an up close on this, followed by 2 down closes, followed by an up close. That's what we need on the NQ. There's the up close. The ES up close should have moved up, but it didn't. Alright, now we need a couple of down closes followed by an up close on the NQ. So you can't say that kind of stuff if you're using like minute bars or any time-based bar, volume bar, tick bar, because you don't know where it's going to close. But with a range bar, you know where it's going to close exactly. So I know 2 down closes followed by an up close is what we need. Down close on this, a down close on the next one, and the one after that would have to have some downward movement to hit the midpoint. But then an up close would work. Suggesting it's going to move down right here. Last one was right. Suggested it was going to move up, and it did. And before that, down, and it did. So we don't need to go down too far. There's the black arrow. So from here, we need another down close to get to the midpoint that would put us in the oversold. Then we'll need an up close off the midpoint to take it out of the oversold. Okay, on the ES we need a down close on this one and a down close on the next one. On the NQ we're just about there right now. We need an up close on this bar. Nope, now it's too far away. It's not going to be a trade. The ES needs a down close followed by an up close. The NQ is too far away. It's going to change the background color. So this nailed it. The swing trade nailed it right there. It's good stuff, these swing trade tools. Alright, you have a great week too, Wayne. Didn't work out here on the ES either. We only have 5 minutes left. We'll see if we end up with any more trades. It could happen. Need some really big trades to get to our average, our Wednesday average. So far, if you had 10 contracts on, it'd be enough for half a year's worth. If you had 1 contract on, it'd be enough for 2 weeks. So far. I'm comparing profit to subscription cost. Just gotta wait for it. NQ, SPY. Crude has a sell. The ES has a buy. Oops, 25 of them came out. Sorry. The NQ has a buy. The ES has a buy. The ES has a buy. And those other ones were in this channel. Which question now? Oh, there it is. Tomorrow, am I looking for the ES to move at market open or the Fed statement at 2 p.m.? That's not tomorrow. Tomorrow is CPI. The Fed statement's not till next Wednesday. But tomorrow I'm looking for it to move at the open. Yes, when the CPI comes out. It'll move before the open. It'll move at 8:30. Hell. Then when the actual markets open up, the equities and stuff like that, when they actually open up, there'll be some movement in the first half an hour. It'll be kind of like today was, probably. You know, I started off really well. My first trade today was 25 ticks on the Russell. My second trade was 12 ticks on the gold. And then I didn't have an NQ trade for like the first half hour. I don't think I was really watching it though. But I expect tomorrow morning will probably be similar. 9:27 is the time to get in there. 9:27. Okay. We're running out of time, guys. Might have to end this the way that it is. Just 3 trades, $500. Wait. Wait. Could have a trade here on the NQ. If it hits midpoint, it gives an up close. Could have a trade here on the S. If it hits midpoint, it gives an up close. They could both turn into trades for us. Okay. Now, the NQ didn't hit the midpoint, but you could grab it on a pullback like that, right there, if you wanted to. Actually, if it hadn't gone 10 ticks into profit, you could grab it on a pullback. If it hadn't gone 10 ticks into profit. The S didn't hit the midpoint either. And neither one of them worked out. Trades. Okay, it's just about 4 o'clock and we turned to red here. I don't know that we're going to get a trade, a short trade on the NQ. That was not a valid trade there, not a valid trade there, not a valid trade there. I'm just going to call it, guys. I'm stretching it right now to try to force a trade, and whenever I do that, it's just a bad habit. So I am just going to call it. And today's Wednesday total, sadly, today's Wednesday total. Let's add a row above and copy this one and paste it in that one. Okay, so today on the NQ, we got 10 ticks. Number of trades, 3. So this average is going to drop right now. Bang. 29.93. That's it. That's the way that it is, guys. Today is 9/10. So far in the 19 weeks now that I've done these Wednesday trades, we're averaging $2,993 with 10 contracts on, or $299 with 1 contract in each session. Today we only managed to get 50 with 1 contract, 500 with 10. But it is what it is. You know, we only had 3 trades in here today. If you have not taken a trial with us, go here to tvtrades.com, tv-trades.com. Alright, right down here, click on any one of these orange things. It's going to bring you all the way down to the bottom, I hope. There's, just took a second. Bring you all the way down to the bottom. It's $25 a week, $90 a month, $997 a year. 3-day trial. Alright, get started now. The sooner you get started, the sooner you'll have access to all the cool stuff that I keep creating. That's it, guys. I'm gonna wrap it up. Alright, let me stop the recording here. Stop the recording now.